Hello friends, welcome to my channel. In this video you will learn about angel investors. Who are angel investors? What are the advantages of taking funds from angel investor? What are the disadvantages of taking funds? So these will be discussed in this video. Who are angel investors? So angel investors are the wealthy private investors that are focused on financing small business ventures. That means they are interested in investing at an earlier stage of the startup, and in exchange for equity, maybe 25%, 20%, 10%, as the case may be, plus they invest their own fund, unlike venture capital fund, right? Because in case of venture capital fund, they don't invest from their own fund, they are just a fund from other public to and other investors, and someone is managing that fund, okay? But in case of angel investors, they invest their own fund. And not only funds, they also come up with the experience, and they help us to shape business models, creation of business plans, and connect to the resources. And most important thing is without stepping into a controlling or operational role, because they are passive investors. Generally they are passive investors, unlike venture capitalists, because in case of venture capital financing, they need controlling too, okay, control role or operational role too. They are actively involved in business activities, but in case of angel investors, they are passive investors generally. So they come up with the experience, they help us in business models and creation of business plans, but there is no that much control over business, okay? So this is the third difference between angel investor and venture capital fund. Understand what are the advantages of taking funds from angel investors. So first advantage is they are expert investors, they have relevant experience and knowledge at a relevant industry, because and they also have large sectoral knowledge too, because they have or they are business owners, okay, and they can provide you relevant guidance in your industry and coaching that can help you to achieve that kind of growth. And next is large set of connections, because they are well connected in the business. They can connect you with new clients and maybe funding options or human resources. If you need senior employees, they can provide you good connection. And the next is extended support. And why they will provide extended support? Because they will make profit only when your startup is profitable, right? So they will be encouraged by their position to contribute as much as they can. So let's say they are owner of 20% of your business, right? So they will contribute as much as they can, because they will be profitable only when your startup will be profitable, right? And the next is big bankroll. What is this? Because you may need additional fund at any point of time when banks or financial institutions may not provide you that kind of money, right? So they can make additional contribution in your business too, because obviously they are angel investors, they are high net worth individuals. They can provide you funds if they can see the potential of your startup, right? So they can provide you additional funding too. Next is disadvantages of taking funds from angel investor. So first is you may not get any kind of fund from angel investor, because maybe your product is not revolutionary, or they cannot see the exceptional growth potential in that particular product, okay? So you may possibly get rejected, because they are only interested in high growth potential products that are exceptional or unique features, right? And next is shared authority, obviously, because in return they will need equity, right? They demand equity, so they may demand a significant ownership stake, and then it will have a shared authority and you have to dilute ownership, okay? So this is also a disadvantage. And next is possibly ineffective, because you have to understand that providing funding is the one part of angel investor, because other part is references, connections, and experience in that particular industry. So you have to decide whether the particular person is providing you more funds and they have less number of connections, or they may not have that kind of relevant experience. So you have to decide whether experience is important or you may need fund only, okay? Because you may find an angel investor who are ready to invest, but they may not have that kind of relevant experience that you need, right? So you have to decide, otherwise it will be possibly ineffective. And next is effort and time, because it is a long process and paperwork required, and there are tons of paperwork including income statement, balance sheet, cash flow statements, bank statements. You need to produce all the papers to the angel investors, and it is time consuming. And next is how to find an angel investor. So first you have to prepare a list of angel investors from online source or offline source too, right? And next you have to figure it out who are the angel investors that have a relevant experience in your field. Then you can choose whom to approach, right? And just like this, you can see the name of top angel investors and their major domains of investment, and you can also analyze the past investment they have done, so that you can analyze what kind of expertise they have, what kind of experience they have, what kind of relevant field they can provide you help, right? What kind of connections they have.